Think about it. How many times have you entered a trade not because it was part of your plan, but because you were bored? Because you felt like you had to trade? That's impatience. And boredom trades have destroyed more $5,000 accounts than bad strategies ever have. Or maybe you've had this one. You see the account stuck around the same balance for weeks. You're grinding small wins and small losses, and nothing's really moving. Then one day you tell yourself, I need to break out of this rut. I need a big trade. And suddenly, you're risking 20% of your account on one setup. One loss later, you're down $1,000. And panic sets in. That's impatience too. The market punishes impatience like gravity punishes people who ignore cliffs. It doesn't matter how much confidence you had on the way up. The fall is instant and unforgiving. Here's the brutal irony. The very thing you think is speeding you up is actually slowing you down. Impatience feels like acceleration, but it's really sabotage. Because every time you overtrade, overleverage, or force a setup out of boredom, you're burning through the very capital you're supposed to be protecting. And the $5,000 test is watching. Let me put this into perspective. Say you risk 2% per trade. That's $100 on a $5,000 account. If you stay patient, take only high-quality trades, and stick to the plan, you could survive 20, 30, even 40 losses in a row without blowing up. Statistically, that survival alone gives you enough space for the odds to eventually tilt in your favor. But if you get impatient and risk 10%, that's $500 on one trade. You lose 2 in a row, and you've already dug a hole that most traders never climb out of. Impatience shortens your runway. And once your runway is gone, the plane crashes.